Daljeet, hi, afternoon. Is there merit in believing that banks are finally going to make a second comeback this year?
Good afternoon. So, see, it is more of a valuation catch up and something which has not participated for in this entire leg of rally. So, when you see at this time when almost all the market is buzzing, everything is on the costlier side, you would try to find something which is less or relatively better priced. I think banks have not done that well in the last few months. So that is why some kind of rotation is happening there. The problems of banking system, I don't think are just going away in a hurry. This deposit issue is going to be quite tough and not so easy to crack. It will take its own time. Not that it is a permanent failure or something like that, but definitely it will take some more time. So I think for the time being, as in our portfolios, we have moved towards the financial services part, which is mainly housing finance and some of the NBFCs. Those are the areas where we are looking at and preferring over the mainstream banks. So at this point of time, positioning is more towards the financial services company.
Nuresh, we are almost at a new high. I mean, it's a matter of what, 1% and then the ring of a new high. Do you see this market rally, which in a sense started 2 weeks ago, markets or Nifty is capable of not only making a new high, but it may well extend beyond that?
So there are two parts to it. One, the Nifty is doing well. The broader markets are doing well. To sustain above the new highs, we'll need support from the Bank Nifty. And today has been the first indication wherein we've started seeing banking financials actually do some bit of an outperformance on a daily basis. It's been a long time we've seen that happen. So if that happens, if we see Bank Nifty making a new all-time high and making a stronger move, then we are set up for a sustainable move above the all-time highs. For now, the viewers will face a lot of resistance around that 25,000, 25,200 mark, unless we see some of the heavyweight banking names make a breakout move.
Bunch of stocks which are also in focus this afternoon. IndusInd Bank, of course, we've been highlighting from the morning the fact that RBI yesterday approved setting up a subsidiary to undertake the AMC business. That stock, of course, has been holding out very well. A good 2.5% uptick, good amount of volumes as well in the stock. And then, of course, there's KEI Industries. UBS's view, they've initiated coverage now with a target price of 61.50. And this, along with Polycab, has been quite the mover in trade today. 8.5% of a notch up coming in on KEI. And then, of course, there's Hindustan Zinc as well. The board has now approved a second interim dividend of 19 rupees per equity. The total outflow to the company now stands at about over 8,000 odd crore rupees. Remember, this was one stock which was in focus earlier as Vedanta divested about a 3.25% stake in Hindustan Zinc through an OFS, and the stock was down about almost 16% in the last 5 trading sessions. And now, of course, Hindustan Zinc post that dividend announcement that they're going to be mulling, that stock has been holding up in trade. Last 7 days, of course, have been rough weather for Hindustan Zinc. With this dividend, of course, Vedanta is going to be a huge beneficiary as well, because it, remember, still holds almost about 63.5% stake in Hindustan Zinc. So more than Hindustan Zinc, it's Vedanta which turns out to be a beneficiary post this dividend. But that said, let's just bring up some of the other movers in trade, and it's clearly all financials. There's RBL Bank holding up nearly 5% in trade. Insurance plays like SBI Life, HDFC Life, all looking good. Bajaj Finserv has been holding out very well. And then Balrampur Chini, which has spiked up a good 5.5%. That, other than the financials, is the one which is looking very smart in terms of a volume price action right now. That stock holding up almost 5.5% as we speak. Kunal, let's get in a check on Balrampur Chini, in fact, at 560.
I think it's looking attractive. In fact, it's one of the better performing names from the sugar pack, because at a point where many of the mid-cap end of the sugar stocks, I think, are trading just closer to their long-term moving averages or by a margin of 5%, 7% higher. This is one of the few names on the sugar pack which is trading at an all-time high levels, and now the stock is almost 40%, 35% higher than its 200 DMA, which is still placed at 400, 420 kind of a range. So I think that's the sign of a stock which has been absolutely strong in terms of the trend. I've been bullish on the stock over the last few weeks as well, and highlighted targets closer to 500, 550 range for Balrampur Chini. I think this seems to be a complete breakout move, and this indicates that the stock is restarting a very strong uptrend on the yearly basis. So would not be surprised that even the stock scales past to levels of 650 to 750, potentially in the manner of next 6 to 9 months.
I'm just looking at some of the defense shipbuilding stocks here, and one is that we may look at the last 3 years and talk about what crazy bull run it's been for them, or we can look at the recent high and then talk about how some of them have corrected and collapsed. Kochi Shipyard is down more than 20%. Mazgaon down more than 20%. HAL is down by about 20% plus. So from the recent high, which is what you want to look at it, let's say 1 month change or 2 week change, the cracks are now clearly visible in some of these stocks. Daljeet, is the party over in some of these stocks?
In these stocks, I would say they are valued much ahead of the time. So whether party is over or not, it will depend upon this theme, how much it continues, or if the liquidity continues to come in and people find that this is an area where it is a sunrise industry. So much of growth is there and so much of potential. We all believe in all of those things. But the point is that at what valuation are you entering? So if somebody had entered 1 year, 2 years back, as you said rightly, that time it was something which was undervalued. But you have paid for probably for the growth of next 5 years, in most of these stocks. So the only way to get to the rational valuation would be the time correction. So I would, or we are actually, in any case, we are not invested in any of these stocks. And in fact, we don't advocate also getting into these stocks even after 20% correction, because we believe that they are valued much ahead of the time. They are all good companies. They will keep performing, but you have already paid them for next 4 or 5 years of performance.
Naresh, coming on the charts of some of these shipbuilding names, your Kochi, Mazgaon, GRSE, and do you see further breakdowns coming in?
So, in the short term, the charts look very clear that a top is in place. Whether we get into a much deeper correction, that's a question mark as of now, but there's a high possibility we go take a 20-25% correction from the top, which is very normal in such moves wherein there have been multiple X times moves. So in this case, say a Mazgaon which topped out at 5,800, going down to 4,000 odd levels would be pretty normal. So view is the top is in place, and then we could go sideways. So if you look at say what happened to Mazgaon Dock for a year before this recent move from 2,400, the stock was sideways for a year. Same way Cochin Shipyard for a long time used to be sideways. So this could be a good time to actually keep on trimming positions and not look to buy on dips, because there's a good possibility if they don't fall 20-25% from top, they're not making the recent tops for many months together.
Let's now try and understand that UBS note wherein they've initiated coverage on wires as well as cable stocks. In fact, Ria is here from our research desk to give us a roundup of the note and why they still have conviction in these names even after the parabolic rise that both KEI as well as Polycab have already had. Ria? Okay, we'll just get to Ria in just a second from now. Seems like there's a bit of an audio connect over there, or disconnect over there rather. But yeah, both of these names are the ones which are flying high. And Daljeet, the point always is that no one's debating the long-term story when it comes to the wires and cables industry and how much of a growth that they can actually clock in. But the thing is, do you buy them at the current valuations after the run-up that these stocks have already had?
So we will definitely not buy at the current valuation. We are very clear, very, very conscious about the valuation part. We normally tend to avoid things which are too much of fancied and which go beyond valuation. So it is very important. We are, as you rightly said, we are also very bullish on power sector as a theme, entire sector, and it can be played through all its sub-segments. Whether it is in generation, transmission, distribution, ancillary providers, services providers. So, and we are holding some of those names in our portfolios also. But definitely these companies are very good. They've been delivering good numbers, very strong growth also. But again, the entry point is something which we have to be conscious because for alpha generation point, it is very important that you should at what level you are entering the stock. That will make the difference.
Way to value, Daljeet, a stock like Ola.
Sorry.
Ola Electric.
Again?
What is the right way of valuing that stock?
Yeah. So again, we have avoided that. Right way of looking at it would again be the same. Are you believing the story and then building numbers on that wishes and hopes that what kind of numbers will come, or would you like to see some green shoots of those numbers in terms of profitability? I'm talking. So we will definitely wait for those, and that's why we have avoided the stock even at the time of listing also. Now I am told some people we have discussed them amongst our peers so much. Somebody was giving me a very strange way of valuing this company that you have to value them on the battery pack capability. No, per megawatt of what battery pack, what kind of value they have, and then compare it with Aman Raja and Excite. And if these guys are one step ahead with the battery, they're giving you the vehicle also. So you should give them double the value. Now, you have in bull markets, you have all these strange ways of valuing the companies. Last time we had seen price to sales multiple. This time we are looking at something else. So these kind of fads will keep coming in. But I think one has to remain rational to look at ultimately stock price will be the slave of profitability. We have to look at the profitability or if profitability, visibility of the profitability, even if it is exactly not there, but there is some green shoot, something coming up. Okay, next 6 months, next 1 year, you will see that number. So as of now, it is just on the paper, all the numbers, theory. We'll see how it pans out, and maybe at some point of time we will also enter.
At some point in time, not now, but let's get back to that UBS note on wires and cables. Ria is back with us. Ria, what does the note have to say?
Yes, so UPS has come out with a note on the wires and cables industry, and they've initiated coverage on two major players in the industry. On KEI Industries, they've initiated a buy call with a target price of rupees 6,150, and for Polycab, they've initiated a buy with a target price of rupees 8,550. Now, they say that this is the best play on electrification at the moment, and the segment is poised to grow at 2 times the GDP growth over FY24 to FY30, and they say that this growth is going to be driven by capacity expansion and strong domestic demand supported by the transmission and distribution capex and the real estate cycle as well. Now, they've also said that the favorable supply-demand dynamics are going to benefit the industry leaders, and the current $8 billion segment is going to be worth $20 billion in FY30, and further they've stated that the market share of the top 5 companies are going to rise subsequently. Now, on the export side, they've said that the shifting global supply chain and the incumbents' sizable capacity should lift export revenue from $2 billion in FY24 to $5 billion in FY30. And they also think that the consensus has underappreciated the potential ramp up of exports. Now, they see a 16% earnings CAGR over FY24 to 27 for Polycab, and for KEI they see a 24% earnings CAGR over the same period. Now, they've also said that these compounding earnings are going to support expensive valuations. And lastly, for KEI specifically, they've said that the stronger balance sheet and the improving brand strength would make a case to expand its product range to compatible segments like switches and switchgears and small electrical products as well.
Okay, that's the view coming in on KEI and Polycab. The way the stocks have been running up, perhaps renewed vigor after the UBS note. But Naresh, just very quickly on the charts, will these stocks continue to hold up, KEI as well as Polycab, or do you think there could be some correction for an entry point or perhaps an add to the current positions?
So the way the stocks have moved up sharply over the last many months, it makes it a difficult proposition in terms of a risk reward. But given that the trend have been strong, we don't go against it. But today was a one-day move on the back of a report, so there should be some fade-off move over the next few sessions. Because when we see such notes, we see a spike of 8 to 10% and then see a 3-4% correction over the next few sessions. So that would be my view. So for now, wait it out, wait for a 3-4% correction, and then maybe look out for a trade. But overall, the risk reward is still not in favor. So even if it comes down, it should be a more so of a partial trade rather than a full initiation.
Okay, let's also take in some closing trades on that note. But before that, Daljeet, we'll let you go. Thanks as always for taking the time out and joining us today. Kunal, what are your closing ideas?
So I'll be bullish on Tata Power from here on, and my expectation is that the stock has formed a bottom for itself. In fact, it's tapped into a support territory of 410, 415 mark for the 5th time in the last 4 to 5 months. So expecting a very similar kind of a price action on the upside, which had happened in the previous 4 attempts. Buy on Tata Power.
Okay, a buy on Tata Power from Kunal. Naresh, what's on your closing trades list?
So that would be a buy on ICICI Prudential Life. We are seeing good momentum across the insurance space, and it has gone through a long consolidation as well. So ICICI Pru was last at these prices back in July 22. So looks like a 2-year breakout in the making. So once it sustains 70-50, could be a much bigger move, and the whole sector looks interesting. So ICICI Pru would be a pick.
If you like this video, then like, share and subscribe to ET Now.